Hi everyone, welcome to another video. So in this video, we'll try and understand a major concern for a lot of automobile companies or the automobile sector in general with respect to GST, and that is on the GST Compensation Cess. Well, GST 2.0 came in recently, and this had a lot of changes with respect to GST rates from 22nd of September 2025. And on cars, there was a substantial change, a reduction in GST rates from 28% to 18%, which was very beneficial to the end consumer, the customer. But as far as automobile dealers were concerned, they had a concern, they had a loss because this compensation cess which they had incurred on their purchases were no longer available to be charged on the invoice after 22nd of September 2025. So after this particular date, there was no concept of compensation cess, and whatever cess these dealers had incurred on their purchases just lapsed beyond this date. And there was a total of 2,500 crore worth of compensation cess lying accumulated for this particular sector up to this particular date. So let us do a deep dive and understand the main reason for this issue. But before that, let's do a small conceptual understanding about what this GST compensation cess is all about. Well, since 2017, beginning of GST, this concept was brought about by the central government with the objective of compensating some states which were at a loss because of the introduction of GST for the first 5 years since implementation. So up to 2022, the idea was to collect compensation cess on certain products and services by the central government and then use a particular formula and distribute it to states which stood at a loss as far as GST was concerned, because GST is a destination-based tax or a consumption-based tax. Not all 29 states gained in terms of revenue as far as GST was implemented. Some producing manufacturing states stood at a loss. So to compensate those states for the first 5 years, they brought about the concept of GST compensation cess. And because of COVID and all that, this was further extended. And right now, as we speak, up to 31st March 2026, you still have compensation cess being levied on some products and services. But the main problem with this is that, with the cess is that, as far as compensation cess is concerned, it has a restricted set of concept, which basically means that you cannot use compensation cess on your purchases to set off against the GST on your sales. You can only use it to set off against the compensation cess on your sales. So that was a major drawback of this particular compensation cess, which is treated to be like a separate tax under GST. Now, GST 2.0, like I said before, came into the picture from 22nd of September, and for petrol vehicles having a engine capacity up to 1,200 cubic capacity, and for diesel vehicles having an engine capacity of not more than 1,500 cc, for them from 28% it was reduced to a 18% GST rate, which was quite beneficial. And for other vehicles, luxury vehicles or those having engine capacities more than 1,200 to 1,500 cc, you had a GST rate of 40%. Earlier, it was a 28% plus a 22% GST compensation cess. Now, this entire thing has been merged or subsumed into a blanket rate of 40%. And after this 2.0 came into picture from 22nd of September, compensation cess was abolished or ignored for the automobile sector, which basically meant that though this concept of cess is available till 31st of March 26, from 22nd of September 25, there was no compensation cess for the automobile sector. Now, to understand the impact, let's take the help of an example. Now, prior to this 22nd of September, let's say the automobile dealer purchased stock in terms of buying different types of cars. In this case, let's say the value of the car was around 10 lakhs. Earlier, there was a 28% GST even when you buy a car, even when the automobile dealer buys a car. So that's 2,80,000 rupees. And then earlier, there was a cess of 15% compensation cess, because the cess normally on cars is 15%. So the dealer, when they purchase their stock or cars, they have to pay GST and cess on top of GST. So cess is 15% of 10 lakhs, 1,50,000 totally. They paid 14,30,000 from their pocket to buy their buy one car in their stock. Now, if they are selling to the end customer after 22nd of September, what will be the scenario? Let's say the value, they are adding some value and that becomes 10,50,000 rupees. The GST rate, which was 28%, has been slashed down to 18%. So it's a 1,89,000 off on 10,50,000. And like I said before, from 22nd of September, as a part of GST 2.0, there's no concept of compensation cess, so that becomes nil. And total here, what they charge the end consumer and the customer is 12,39,000 rupees. So if you compare this 14,30,000 workout and this 12,39,000 workout, what you will observe is that in terms of value, as far as the car dealer is concerned, they could earn a profit of 50,000 rupees. But as far as cess is concerned, because they had to pay compensation cess of 15% on their purchases, but no cess they can charge on their sales to the customer, this cess of 1,50,000 directly becomes an out-of-pocket cost for the auto dealer. So 1,50,000 becomes a cost for the dealer. Of course, you have 28% GST on their purchase and 18% GST on their sale. Of course, they can utilize this GST up to 18%, and then for the remaining, for the subsequent sales, they can use the remaining amount of input tax credit and all that. So that was okay. But as far as compensation cess was concerned, this was a straight cost for the company, for the automobile company. After 22nd September, they had to bear it as a cost, write off as an asset in their books and all that. So if you look at it, profit is 50,000 on the value, 1,50,000 is the compensation cess. They ended up making a net loss of 1 lakh rupees for that buying and selling of one car, buying before 22nd September and selling after 2.0 came into picture. Of course, ITC you can set off first up to 18%, and for the remaining 10% use it later to set off. So that was no issues. That was of not major concern for the automobile company. But the compensation cess, which now cannot be utilized and will be lapsed, is going to be a cost for the automobile sector, and because of this, net loss became 1 lakh rupees. So therefore, there's a lot of hue and cry by the automobile sector because one, the compensation cess was brought about in such a way that you can only set off one cess against another cess, so it cannot be set off against normal CGST, SGST or IGST. You cannot claim a refund currently in the GST law, in the Provisions, Rules Act, whatever. There is nothing which says about refund of compensation cess. There's a refund of GST. If you buy a product at a higher GST rate and sell it at a lower GST rate, you can claim refund for the differential amount or wait till you utilize your entire amount in subsequent sales. But as far as compensation cess is concerned, there was no concept of refund at all till now. Well, you can definitely carry forward. Some companies have taken a decision not to write off that compensation cess in their books and to keep it carried forward on the GST portal, hoping that something will happen in future. And they hope that there'll be some clarity that will be obtained from the government. At least before 31st of March 26, the automobile companies or the sector in general is hoping that the government comes about with some beneficial scheme of utilizing this accumulated GST compensation cess, maybe in terms of set off or maybe in terms of refund. Well, I hope I was able to make things clear through this particular video. If you like the video, you could show support to us by hitting the like button. If you want more videos like these on a regular basis through way of notifications, you could also think of hitting on the subscribe button. Till then, I'll see you guys in the next video. Take care and thank you.